gentlemen, Matthew's here. I'm back again with another video. Today I want to show you a trade breakdown of a Weat trade that I was actually looking at, which turned out to actually be invalidated. I didn't get to take the chance. Actually, I didn't even get the chance to actually take the trade. By the time I was checking, the market has already moved past my level, which was actually bad. Looked very, very nice. So let me show you what I saw initially. All right, so I saw this nice level here, which was my higher high. So my higher high right here. Then I saw this level here as my QM. Okay, my Quasimodo level, right? And then there was a low here. Okay, there's a low here and the broke of structure, right? After this, what I saw was a lower low which was formed, and this meant that this market is no longer going to be up because we expected the market to continue going up, right? So this here gave us a lower low. Then the market continued to go down, right? So the market broke this low and created another lower low, which meant that the market is no longer going to be an uptrend. Initially we had this trend, right? With this, but immediately this level is broken. It means that the market is no longer an uptrend, right? So now that we have that out of the way, let me just continue with our analysis. So this here was my break of structure, right? This was my break of structure right here. Yeah, break of structure. And then the next step is to look for levels where the market is actually faking out. So I noticed this gap here, and there was actually a level there which held a little bit, a tiny bit, and then the market actually broke through that level. So I identified that as my resistance, right? So I had two resistance. Actually, this level held also as a support, but I didn't actually notice this. This was a support and this was a resistance. So the only thing I noticed was these two. I had a resistant one here and another resistant two here. Okay, so it was actually coming out pretty well. I was like, okay, this is on my radar, and I was looking forward to trading this. Then, apart from this, I noticed something. Okay, so I was actually able to draw this. So if you look clearly, you have more like we had more like this. I think I took this here. So we had the market actually kind of respecting this. So it's like, okay, so by the time we're going to have that other touch, the market would have dropped from there. So the first touch was this one here, and the next touch was here. The other one was here. As you can see, it gave us a little bit of a correction there before it dropped. So it's like, okay, this is looking pretty good. And then I was looking to sell here. I was looking to enter for shorts right here. Okay, I was looking to enter for shorts right at this level here. And yeah, that was my plan. Okay, my plan was to sell right there. And then, yeah, my entry was going to be right here. Of course, after waiting for confirmation, because we don't just enter trades, we wait until the market has shown us the confirmation. And then my stop loss was going to be above here, stop loss, right? And then my take profit was going to be below these levels here. So that was the plan. My take profit right here. Okay, so this was the plan. And then this level here is my liquidity zone. Liquidity zone, right? This is my liquidity zone, and I had a rally base drop supply zone. So I had a rally base drop supply zone, Okay. Apart from that, what else? I think this is pretty much what we had, and honestly, it looked very nice, very very beautiful. So let me show you that I'm not just talking about this. I actually plan to take this particular trade. Let me just show you. So I hope you also journal your trades. This is how I journal my trades. So if I open this, I have my September analysis, I have my October analysis, I have my December, I have my July analysis. Okay, and if you open the July analysis, chart analysis, you have weeks there, week 1, week 2, week 3, week 4. If you open the October analysis, you have week 1, week 2, week 3, week 4. And if you open this, they are actually before and after pictures. Okay, so if you open the October, the September one, you have got pictures there. You've got screenshots there. So I'll go straight to my week 4 December, right? You open this, I'll look for my wheat. So this is the wheat. Let me just open it so that you check. The wheat trade is here. Let me just show you what I saw before all that move happened. So it's very important for you to be able to get back to these charts and actually see what you did wrong so that you can actually learn from them. It's very important for you to have an evaluation process so that you know where you're actually getting where you are wrong, if there's any, or it's just maybe it's just part of trading, which is which everyone actually goes through. So it's important for you to be able to monitor yourself like that. That's how you grow. That's how we grow as traders. So this was the before. Okay, you can see everything is the same. This is what I had. This is what my plan was. I looked at this, it fit perfectly. I had a nice QM here, high, in the low here, in the break of structure, resistance, resistance. As you can see, the market was here. So I was waiting to enter right there. Okay. But by the time I was checking, the market had broken down like that. Okay. By the time I was looking, I was coming to check on this, the market had pushed the upside past my level, right? I didn't actually take this particular trade. I was looking forward to taking the trade because it had met all the criteria that I look for. So you see how important it is to actually wait for confirmation. So it's very important. So if I'd left a pending order right here, guess what would have happened? I'd have been in a loss right now. I'd have been in a loss because the market literally just pushed there. Of course, there was a little bit. If you go to lower time frames, there was a little bit of some kind of rejection here, but it wasn't good enough. It rejected a little bit and then pushed it upside, right? So it's always important to actually wait for confirmation. No wonder I don't usually use the pending orders, because if I'd put the pending order at this level, I'd have been in loss right now. I'd have been taken out already because my stop was going to be above here. So it's important for you, it's important for us to actually to be there and wait for your confirmation, because we know that not all setups are going to work. Not all setups will work 100%. Therefore, we have to actually be able to know when we are entering into the market and be there and see nicely, have the confirmation so that you can actually take the particular trade, right? It would be a different story if I was actually looking at this side. I wouldn't have been taking this trade because I didn't have enough confirmation to actually enter into this particular trade. And the time I was checking, the market had already moved past my stop loss. Okay, so this is how it is. So I hope you find some value in this. Okay, and I hope this goes to show you that we're not always winning. There are trades that actually look very perfect but end up failing. That's how it is. And you can have a very very bad looking setup but end up being a winner. Okay, so the most important thing here is you have to continue identifying your quality setup. You need to objectively identify your setup every time. Identify what makes up your trading setup. Identify those variables, and those variables are supposed to be constant for you to have constant results. Okay, So thank you so much. If you've reached this level, if you've reached this end, thank you so much for watching. I hope that you find value in these videos. If you do, please like the video, subscribe, and also leave a comment in the comment section. And thank you so much for watching, and God bless you.